Good morning, traders. Chris Buss here with your morning look at markets for Tuesday, August 3rd. Taking a quick look at futures. Up a little bit. Large caps up 0.33. NASDAQ up 0.10. Small caps up 0.7. Oil's up 0.8, bounce back from yesterday. Copper's down 0.75. Gold and silver down as well. On the macro front today, very light day. We've got factory orders. That's about it. On the earnings front, some decent names, but nothing blockbuster. We've got Baba, BP, ConocoPhillips, and Under Armour before the bell. And then after the bell, we've got Lyft, Big Five Sporting Goods, and Devon after the bell. And I wanted to make mention that yesterday we did not have the greatest close we've ever had. And there was a lot of chatter out there. This FOMC, I guess he's a governor, Chris Waller, was out in the afternoon. I personally think he was hot dogging. I think he was trying to be a newsmaker, but he was talking tough, talking hawkish, that we could start tapering in September and blah 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 blah. And the market, of course, didn't like that, but I'm fading that guy. Powell has spoken. Bullard had an opportunity Friday to come out and say, put a hawkish spin on the meeting. Didn't do that. And now this guy that no one's heard of is out there popping off. And, I kind of equate it when you're kids. You got your group of kids and, you go out to recess and all these kids, talk about what they're going to, we're going to play kickball, we're going to play softball, we're going to play football. And then the alpha dog comes, kind of the leader in the group, and says, you know what, we're going to play kickball. And then everybody else says, great idea. And I think that's the same way with this Fed. They'll come out and say what they want to say and, offer their opinion. But when they get back in the room, Powell's going to say, this is what we're going to do. And then they say, fine, you're the chair. Now, tomorrow we've got Richard Clarida. His comments carry a lot more weight. He's vice chair. So, if Clarida comes out guns blazing, then maybe we got more to think about. But until then, I'm fading this guy, Chris Waller. He messed things up yesterday. But, that's markets. That's what happens. So we'll just have to move on from there. Okay, let's talk a little bit about trading wisdom. Again, this is a follow-up story from Livermore, who we discussed, likes buying stocks as they break round numbers, as they break par, break 100, break 200, break 300. So here's part two of the story. Anaconda opened at 298 and went up to 302 pretty fast, but soon it faded away. Also, the rest of the market was not acting just right for a further rally. I made up my mind that if Anaconda went back to 301, I must consider the whole thing a fake move. On a legitimate advance, the price should have gone to 310 without stopping. If instead it reacted, it meant that precedents had failed me and that I was wrong. And the only thing to do when a man is wrong is to be right by ceasing to be wrong. In other words, get out of the position. I had bought about 8,000 full shares in the expectation of a 30 to 40 point rise. It would not be my first mistake nor my last. Sure enough, Anaconda fell back to 301. The moment it touched that figure, I went over to the Telegraph and said to the operator, sell all my Anaconda, all 8,000 shares at the market, in a low voice. What happened shows you that I am right in never trading at limits. Suppose I had limited my selling to 300. I'd have never got the trade off. No, sir. When you want to get out, get out. And I'm reminded of times in the market where either on Twitter or in the trading room, you often hear a trader say, God, I would have made 20 points, but I didn't get filled. Or I tried to get out, but I couldn't get filled, right? So those are people that are setting limit orders at certain prices and the market maker just not filling the order. Maybe it's too far away from the bid or the ask, or the market was moving too fast and it skipped over your bid or your ask, and then the market left without you. And the thing that you ask yourself is, let's say you're trying to get into a market. Obviously, you think it's going up, right? So, like yesterday on Square, we talked about that may be one that has the potential of really moving on that Dorsey news. They bought that company for $29 billion. They had sold it off in the pre-market, and as soon as it hit the bell, it was off to the races. Now, you could have sat there with a bid that never got filled while the market goes up, $20 or 20%, whatever it was, and you just sit there the whole day, locked out of the trade, or you watch the tape carefully, and on a downtick, you hit it at the market and get in. If you think it's going up, that 50 cents is not going to matter. It's not. And then you'll be in the trade. And by the same token, if you have decided that you're in a losing trade, don't sit there all afternoon, putting offers out there while the market's going down and nobody wants to pay your ask. And it just keeps sliding and sliding and sliding. When it's time to get out, get out. Hit the bid, close it out. That 25 cents or whatever you think you're trying to save is going to be inconsequential when the stock goes down $5 while you're trying to get an ask filled. So recognize those situations. Recognize that the market maker is going to make money no matter what. I think the only exception to that is if you're in a super illiquid name where the bid-ask spread is massive. Then you got to be a little bit more careful. But at the same time, that mistake was made getting in. I mean, if you check into the Roach Motel, it's going to be tough to get out. So in a lot of those cases, just avoid those stocks to begin with. So I hope you found that helpful. Now let's move on to our charts. Dollar was down yesterday. It's starting to slip down below our 200, tagging the 50 on multiple days. The real action was in the rates market, and rates got eviscerated, down 5%, down 6.5 basis points, down to 1.174 on the close. And you can see just how well these rates have behaved within the down channel. And, on a day where rates are cratering, for the most part, cyclicals and all that kind of stuff is just not going to work. You've at least got to have stability, in my mind, for any of that stuff to work. And, these COVID fears are creeping into the market. Now, if you listen to that guy, Dr. Scott Gottlieb, he seems to be about the most reasonable voice out there on this COVID variant. I don't think you can base anything off of the CDC or local officials or anything like that. Gottlieb seems to be plugged in not only to the science but the practical nature of it. He seems to think we're on the downward cycle of the infection rate and that it should be peaking, if not now, in the near future. So maybe we have that to look forward to. But right now, the rate market is gripped in a downtrend. And until we see that stabilize, I don't see a lot of the cyclicals or reopening trades really working, and it favors tech and the scenarios that we've already talked about up here with falling yields and a stable dollar. So anyways, that was, I mean, it is what it is. Let's just recognize that we've got a support layer down here at 1.125. So we'll see if it finds support here, but if it doesn't, it's going back to 1%. And yesterday we hypothesized a trade setup. We said to alarm 150 and alarm 148. We got the breakout. If you took the trade, you're already green. Stay in that trade and set your stop back below 150, because if we go down, to 1.12 or back down to 1%, you got a nice winning trade going there, and you'll be up in the 155s real quick. And then if they reverse it, you'll get stopped out. But you're on the right side of the trade already, and that all speaks to setting yourself an alarm and be ready for any eventuality. So that is a nice start to that trade. Our percentage above the 50 just languishes here in the low 40s. Just continues to put exclamation points on bad breadth across the market. Not a lot of stocks working right at the moment. Our equal weight S&P was down just, a quarter, but it came back to our 152 area. So we want that to hold going forward. Notice that we do have these bearish divergences present that are always a bothersome thing. Here on the SPY 2-hour, we had open strong, and then the scenario that I present, it's not anything unique to me, but I did point out that we were going to have a gap open higher and watch for them to fill the gap back down. And what happened was we had a strong opening couple of hours. They faded it back into the gap and then just kept going. So I think again today the pivot is 438, and then we've got what I'll call one last chance at 437 at the midpoint of the channel. If you lose 437, I can almost assure you 436 is in the bag. And if the thing starts rolling downhill, possibly all the way down here to 434, 433 at the bottom of the channel, and then that would be a higher probability, long at the bottom of the channel. But it kind of, we're obviously stalled. We've been knocking around between 438 and 441, call it, for several days, and we just haven't had the horsepower to pop it. And notice we've got declining momentum and declining RSI. So it kind of feels like on a knife edge. That's probably a little bit over dramatic, but that wasn't the hottest close yesterday. And so what I want to see is the dipsters come in and, pop it back above 440 and, make a run up here to the top. I think if we lose this midpoint line, I think you got to be a little bit more defensive in your trading. What I've done here on the SPY 30-minute chart is I've just boxed in the trading range since back on July 23rd. So that, what is that? 2, 3, 4, 5, 6. So we've had 7 trading days within this range. And so as we come down here to potentially tag 436, that range has been $5.50. So if we were to break 436, that brings us down to 431 just on a measured move every day, break of the range basis. So treat a break of 436 with some concern and caution if that happens. If they step in and buy it, that's fine. We're kind of positioned bullishly, so that's what we want to happen. But if we lose 436, I think you got to plan on an extended downside move of about $5. There are some different places in here at 434 and 433, where, quote, they can save it. But there'll be a point where it just moves down to that level. So be aware of that on your charts. Qs, in general, pretty soggy. I have penciled in a symmetrical triangle here. We've got a series of higher lows and a series of higher highs, all coming on bearish momentum and bearish RSI. What I want to see here is the lower side of this triangle hold at like 364.50, and then make a move to break out of the top side of this. And the way these things usually go is that they'll break out in the direction of the prior trend. So our prior trend was bullish, and now we've had this consolidation. The odds favor a break to the top side, but that's by no means a given. So you can see that price is below some of these fast moving averages. So that in and of itself is kind of a bearish tinge to the chart. You want to recapture this 365.50 area, and then you want to break out above 366, 366.50 to give a continuation move higher. And if you saw that, you'd see a bull cross here, and you'd see RSI turn up at the 50 line as well. And here's the same exact chart on the 30, except the triangle is slightly different located, and you've got some resolution. But you can see that energy within these triangles, energy builds. The coil becomes tighter and tighter and tighter, and finally it works itself into the apex, and then it's got to make a decision, either breaks out or breaks down. So I would be watching that triangle fairly closely. And then we've got the midpoint here at 365.50. IWM. IWM has been the place to be if you want to be an active index trader in the last, couple of weeks. Been some dramatic intraday moves. Yesterday, we gapped higher, and we talked about that gap before the open, that there would be a gap below. I've already taken it out, but you can see we opened around 221, and we closed the day before around 221. We gapped up to 222.50 and went right back up to this prior resistance level and failed. So if you were Joe Trader and you bought that open, you got about $1.50 there. And when you saw trouble or at least recognize, hey, this is a high probability short. Why? Because it failed here 4 times before. And then you got a whoosh bar and you went from 224 to close on the dead lows at 220. And there was your $4 trade. Whether you got all that $4 or none of it, it's a good illustration of how that active trading works and how you can use clues from the prior sessions to know where your support and resistance levels are. And so I've dropped in this uptrend line. We closed on the dead lows. I told you we were up 0.7 here in the futures. We'll have to see where that closes. We've printed a series of higher lows, but those advances have been capped up here. What this really needs is a breakout of 224 to get going, and I wouldn't be surprised if we see 1 or 2 more cycles. What do I mean by that? Come back up, get rejected, 1 more time down, and then a breakout. It's either that or we're going to lose this trend line, and then it's going to roll all the way back over and probably test this prior low. So I think this trend line is rather important, and I think as long as price stays above that, you've got an ascending wedge here, an ascending triangle that should be bullish, but you got to get the breakout. You got to get the move above 224. And then here's the exploded view of yesterday. Here was the gap open, the run up to 224, the prior rejection, the rejection here, and then straight down. And the nice thing about this short, once you got your entry, it's set it and forget it. No shakeouts, no bizarre candles. It was just an outright fade the whole day, and that's a nice trade. So anyways, let's move on to the FATMAAN names. And while I got you, if you're a new listener to the channel, I hope you've liked the analysis so far. Why not hit the subscribe button and the alarm bell? That way you'll get my content. And then drop I've got a link over in the show notes where you can join our community and get all my content delivered right to your email, morning, noon, and night, weekends. It'll be right there for you. It would be great to have you, and then you'll get an invite to our trading room where we've had a lot of new traders come on board, which has been great. And of course, longtime listeners, thanks for passing my link along to your trading circles and your friends, other people that may benefit from the work. So let's look at Facebook. Gap down on earnings and then a slow dribble ever since. Right now, we're down. We've filled the lower gap. I think we're getting to the area where you've got a chance for a high probability long. You could say, you could take a long right here at the bottom of the box and say, you know what, I'm gonna be long against 352. I'm gonna put a stop at 351, 350, and then go for a move back up to 358, and then if all the stars align, on up to 362. Or you can say, you know what, this thing may come back right into 348, which I think is going to be a super nice level of support, and hit it there. But I think all of these FANG names are correcting more in time than price. This is just kind of people, there's not a lot of velocity in this selling, at least in my mind. It's been a slow bleed. And I think once those people have done their thing, you're going to see a reversal. And if we don't, then the Qs are going down. I mean, it's just that simple. We've talked about that. But I think here you're getting into the area where if the market kind of stabilizes and looks like it's going to do something, that you can take an objective long here after this gap fill and into this support layer at 348. Apple, correcting in time, bouncing around between 144 and 147. If you're Joe Trader, you can certainly trade that $3 range. But as far as position, swing trading type stuff, I think you gotta either buy the breakout of 147 or buy 144 with a stop just below, looking for a bounce. But if we lose 144, then you're coming down into the 141s. We've talked about that, or lower. But as of right now, I think this is just healing in time and waiting for the market. So I don't think there's a ton to do there unless, like I said, you want to try to actively trade that $3 range. Tesla remains sparky. Coming out of nowhere from down here at 625. This has been a very impulsive move. Yesterday, we got it closed in this 685 area. I had a gap open and a quick run up to 725, where it had backed off into the close when we had that sogginess into the close. I mean, this still looks good. I mean, to me, you've got an open gap here, but you've also got this gap to fill up to 735, 740. So I still like this trade. Here's the daily chart, and you can kind of get the perspective. We've cleared this big trading range. We've gapped above. We're challenging this gap here. And then we've got a target up at 760. Saw a lot of order flow for the 750 calls at the end of the week. So we'll see if that impetus continues. But Tesla continues to look pretty good and active. And notice the regime change on momentum. You've got, all this nothingness down here. And then all of a sudden we have broken into positive regime on momentum, and same thing on RSI, trapped below the 50 and now operating above the 50. So that bodes well for a further advance. With you've even got a PPO bull cross here on momentum. So I like Tesla. Microsoft, very much the same thing as I would say Apple. Just doing some consolidation in time. I think the key thing is working off of this 283.50 at the gap. If you can see that this gap was tested, a couple, 4 times here, a couple times here, it is held. If you got to move into 283.50, I think the odds are that you get long there with a stop just below. And if it fails, you're going to get a move down into 281.50 and possibly 280. I'd be looking for longs. I would not be, that's different than, a tactical short for the gap fill. But I'm talking about longer term for swing type trading when you're looking for some duration. I haven't seen anything yet that would lead me to believe that the whole complex is going to cave in. It may very well do that, but I don't think we have enough evidence to say, let's get short Microsoft. I'm not seeing that yet. So definitely today, if we break this downtrend line and pop up here and take out 286.50, then you've got an open door back up to 290. So still soggy, trading below. What we want to see is a breakout there. Amazon, nothing to really talk about. This is healing in time. Just treading water, letting the people that want to get out, trying to build a base and then figure out which way it's going to go. I think, if you wanted to get long, if you got to move down to 3,300 that held, you can get long and look for 3,375. Another way to play is you say, you know what, let it build its base for as long as it wants to. When it breaks above 3,375, that's when I want to get involved and try to get this $200 backfill of the gap. So that's personal preference and how fine you want to trade it. Google remains really strong, just consolidating here. The comments from yesterday, no changes whatsoever. I mean, it didn't even move a 1/10%. You've got gaps above and below that need to get filled, and I think those would be, perfectly good places to try objective entries, either on the long or the short side. Netflix, nothing. Nothing burger for most of these except Tesla. Sitting here at 515, and as long as you're above that, I think you're okay. But not a lot of, I think the guy that's winning here is the guy selling options and just watching time decay, just eat into them, because I don't see a lot of power here. So be careful, even though you may be at a good technical level, you know how expensive those options are. And if a weekly option is not moving in your direction, you're losing, even if the price is just staying still, because you're getting eaten alive by that time decay. Semiconductors. Nice gap up yesterday, faded into the close, but they still held the gap. I'm long. I'm going to stay long above this 262. Obviously, I don't want to see a back touch, but for those of you that are not in, if you did get that back touch, I think you got to buy it there. Breakout, back test, go. You'll certainly know if you're wrong if you lose 262 and you start moving into 261s and 260. The trade didn't work. Get out, reset, reload. That would be just another disappointment on SMH. AMD continues to work. Here are our targets. I've marked them on the chart. We had a junk close like all of them, but there was a lot of power early in the day. So obviously what I want to see is this thing just continue to grind higher. I think if price came back into 107, this 108 or 106.84 level is support. If you got that pullback into there, I think you can try along there and then have this continue to grind higher. We're going to need some help from the market. We're going to need some help from SMH in general, but the semis have been working, so that's great. Wanted to look at Square. We had talked about yesterday with that move by Dorsey and the stock selling off, that could be a potential move, either with a continuation lower because it had sold off pre-market, or that they buy it up, and they not only bought it up, they ripped it. So hopefully you got in and participated in this monster move. Now remember, I had to go to get my car fixed, so I was not in this trade. I was watching it, but I mean, when you got to leave at 9:45, it's hard to just, put that on and then walk away. So I had to, just for practical purposes, let that one go. And but here's the deal. You can either be pissed off you missed it, or you can look for the next opportunity. Here's the daily time frame. $75 wide consolidation. 200 has been rock solid for a year, or at least 6 months, 7 months since last December. 200 has been the rock. 275 has been the wall. Reject, reject, reject. Peak above yesterday and reject. So now, for you daily swing traders, if this move can extend and get above, break out above 275, you get long. And what you really want to see is you want to see a few days below. A little consolidation below resistance with your alarm right at the, right on the breakout level. And then you know that you have a good probability of a real breakout. Impulsive move, bull flag at half staff, measured move up to 300 or beyond. And then remember, we're back to Jesse Livermore. When you cross par or 200 or 300, that big round number, you could get an impulsive rip even higher that goes way beyond this bull flag measured move. And remember what he says, the move above 200 is more than the move above 100, and the move above 300 is more than the move above 200. So, if this consolidates and breaks out and even consolidates here below 300, making that decision, and then breaks out again, you could have a $360 stock in a flash if the market cooperates and this thing can break out. So I think Square is a super potential haymaker for us. Still a lot of work to do, but you got to have it on the radar, and that's what I'm going to do, and that's what I want you to do. Couple trade ideas. FANG. This is, don't be the guy that buys FANG thinking you're buying Facebook, Apple, Amazon, and Google and Netflix. Be the guy that understands this is a oil exploration name. What I want to point out here is this void here below the 200 that sits at 71. I'm bullish oil, but if this COVID thing catches fire even to a larger degree than it already has and oil falls apart, you've got a $20 void right here between 72 and 52 where there is nobody home. What I want you to do is set yourself an alarm at the 200. Why? Number one, if it fails, time to get short and play for this $20 move. Two, if it holds and oil stabilizes and starts ripping as the economy and the world reopens, you got a nice entry point down here at 72, and you can see that a month ago it was 100. So that would be a real nice chance to buy the 200 and a super high probability objective entry point, because you'll be right down here. And if you got long, if we think it's going to turn around and then you lose the 200, you're out right away, and then you could actually flip short. So I think that's a real interesting setup. So put FANG on your radar and set yourself an alarm there at the 200 at 71. And I just wanted to point out Dollar General was a long trade idea just a few days ago. Maybe last week I didn't look exactly what the date was, but we said to get long against 222.50, and it's put on $8 to $10 depending on where you got in exactly, up here at 232, riding the 8-day with all the exponential moving averages stacked. So that one has worked out really well. If you're in that trade, congratulations. If you're in that trade, stay in the trade. At this point, you should be, ratcheting up your stops. And for those of you not in it, you can put it in your radar because, like we always say, breakout, backtest, go, or Fibonacci retracement, go. So you can look at these, crap, I missed it, and move on, or crap, I missed it, where can I get on the train? When could the next stop be where I can objectively get on the train? Right now it's a bullet train. You can't really get in here. I'd wait for, a pullback to the 20 would be objective. A pullback to 222 would be even better. That would backtest the breakout right into support, and then you can get long for another try. So anyhow, that's Dollar General. Let's see how it goes today. Hope you found the analysis beneficial. And like I said, thanks for your support. If you haven't done so already, hit the subscribe and alarm bell. You'll get all my content. So I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.